Not knowing this about your credit is losing you money. What's going on, YouTube? In today's video, we're going to be discussing some key components to credit. These will be some credit fundamentals, and guys, we also release shorter videos on TikTok, Instagram, and YouTube Shorts. So if you're into those kind of videos, make sure to like, comment, subscribe to stay updated when we post these videos. So the first thing you want to do is understand what makes up your credit. So there are 5 total factors that make up your credit score. 35% is payment history, so that basically means late payments, if you made payments on time, things like that. Another 30% is amounts owed, so it's pretty self-explanatory, basically what you owe on all your credit. 10% is new credit. 15% is length of credit history, which basically means how long you've had your credit score. I was lucky. For example, I'll give you an example. I was 15, 16. My mom put me as an authorized user on a credit card, so that has made my credit history super long up until this point. So compared to other peers of mine from high school who probably just started their credit, I've had the advantage because I was lucky to have a longer credit history. This helps in getting loans because I've had in the past, when I was first getting some car loans when I was in high school, they would say you can't get approved because your credit history is too short. So guys, credit history is very important to show banks that you've had credit for a long time and you've known what to do with it for that length of time. So guys, make sure if you're a younger person watching this video, ask your parent to put you on that card to get that longer credit history. And if you're a parent, go ahead and add your child so they can get that long credit history and get these credit benefits when they become older. Another part that makes up your credit is the credit mix. So basically what different types of credit you have. Some of the important things about this mix is late payments. Guys, it is 35% that payment history. You want to make sure to avoid missing payments, even if it means paying the minimum payment for that month and paying that interest on it instead of paying it out. If you can't make the payment, at least pay 20, 35 bucks. I don't know how much your minimum payment is. At least do that. That way it doesn't mark as a missed payment or a late payment, guys. That is super important. I would rather pay that interest than have my credit score bomb down because I missed a late payment. Another way to not miss late payments is treat your credit card as if it was a debit card. If you're using it as if it's a debit card, you're not gonna be using more money than what you have. So let's say, for example, you have $1,000 available and you spent 1,500 bucks on that credit card. You just went over what you had. So you want to make sure you always spend less than what you actually have available on that credit card so you don't risk losing that late payment and dropping your credit score. Guys, inquiries also makes up that credit history. So don't waste inquiries on, for example, going to the dealer and letting them run your credit, because that's just going to bomb your credit down as well, and it's going to affect it negatively for at least a year. So you want to make sure you use that one inquiry for one thing you know you're going to get and need. Don't spend 10, 15 inquiries looking for different cars throughout like 3 months. Make sure you get one inquiry, get a pre-approval, and get that thing you need, like a car or a mortgage. Another fundamental is a low credit score will obviously cause you to pay higher interest. Why are you paying higher interest? Well, if a bank sees that you have a low credit score, they're going to treat you as a high risk person to lend to. Guys, so the bank, for them to not lose money, they're going to be charging you so much interest. This just lets them not lose money on lending money to you. So let's say, for example, you have that low credit score, they're just going to be going up in money if you are paying it, and it's going to be hurting you in the long run because you're paying so much interest. So you want to make sure before applying for big loans, you work on getting your credit score up to avoid paying those high interest fees and a lot of interest in the long run. So guys, like I was saying, if the bank sees you have a high credit score, they're going to treat you as low risk. That's why these people with high credit scores sometimes get 0% all the way up to maybe like 5% at the highest. Because they have higher credit scores, the banks are like, whatever, just give them money, you know? Because they're not a risk at all. So they're going to make money anyways from like that 3 to 5%. So they might as well lend them money, have them get as much money as possible. Because with, let's say, for example, $100,000 getting 3% is still a lot compared to somebody that's only getting a $10,000 or $5,000 loan because they couldn't get it with a 20% interest. So they can give out smaller loans with higher interest and make the same amount of money with a $100,000 loan with lower interest. So that's just the way it works. You got to think of the way these banks are thinking and get your credit score up to use the banks and not let the banks use you. So guys, that 30% that I mentioned earlier is amounts owed. If you have ever been to a bank and they said you have too much debt to income, this is probably what they're talking about. So let's say you went to the bank, asked for a loan, and they're like, we can't really give you another loan because you already got too much amount owed. So let's say you asked for $50,000 and you already have like $100,000 that you owe. They're kind of like, I don't know if I want to give you that money. You understand? And the main reason this is important, guys, I'm gonna teach you a little loophole. So when you're getting loans, you're normally doing it under a personal credit score, right? That's what you're applying with, your personal credit score. So that involves a debt to income. So let's say you're making $50,000 and they're seeing this high loan amount that you already have and trying to get another loan, they're like, this debt to income is looking really high, right? This is where this trick comes in. So let's say it's just you're making $4,000 a month and you have $2,000 a month that you owe, right? They're like, how's this person gonna squeeze in this other amount of debt, right? Like I said, this is where the trick comes in. If you're a business can manipulate the amount of money that's coming in and out because they can write off certain things. And they can use like, hey, this is coming in, I'm making this, that, you know what I'm saying? So guys, this is why businesses get so much business funding so fast when they start up, because there's like 3 factors that go into it, right? There's collateral, what you can put in to make the banks like, okay, you have this, I'll give you money because you have that. There's the personal credit, you could use a PG or personal guarantor to be like, hey, my credit score is so high personally, please use it on the business to basically show proof that I can do this. And then there's also the cash flow that's coming in, basically saying, hey, my business is making this much cash flow, give me a loan, I can afford it, right? So check this out. A business, they don't care how much they give you because they're like, this person, it's a business, so they're gonna give you higher limits, right? If they see you have either the 3 things that I mentioned, they're just gonna give you that loan. So let's say that $50,000 loan that you asked for personally, they would be more reluctant to give it to you. But let's say you already have $100,000 of business credit and you ask for $50,000 of more business credit, they'll probably give it to you if you're meeting all the requirements. Or let's say you have $50,000 in personal credit, right? So you have that $50,000 in personal credit. You go ahead and open an LLC, set your business structure up the way you need to. Once you set that business structure up, you apply for the business funding. Now you have another $50K of business funding, which is probably a lower interest rate than your personal, and it's not being reported on your personal credit if you do it the right way. So you literally have loans on your business and on your personal that you can manipulate around. So this is why, guys, it's important to maybe look at getting things as a business. Even if you don't really have a business, you can still do a LLC under your name doing certain things, right? It's a lot of things that can be considered business related that you can do, right? So we can make a more detailed video on that later, but that's just giving you guys a little insight on how people get so much funding without having to use their personal stuff, right? So that's just some tips and tricks right there. Another thing that's hurting your credit is not monitoring your credit score, guys. You need to monitor your credit score. Why? Because look, there tends to be a lot of things that are completely wrong on your credit score. I've had some clients that have completely wrong addresses that they never lived in when we do their consultations, and they're like, man, I've never even lived there, right? So it's important to monitor that stuff to make sure you get that off your report, because it could be an address or a loan that's not even related to you that's on your report and affecting you negatively, right? So you want to make sure you're monthly checking your credit score and your credit report to stay on top of things like that, because if not, you're going to be getting the consequences of it and it's not even related to you. So you want to make sure you do that, and you also want to check your credit score to make sure if you're doing the things right, it's going up. So yeah, guys, if you're doing the right thing, you want to make sure you're checking that report every month to make sure it's going up. Guys, these are just some tips and tricks to make sure you're not losing money and getting your credit score up and using all the benefits to it. If you guys like this content, make sure you follow us at MJM Credit on Instagram and TikTok, and make sure you tap in at mjmcredit.com if you want to book a free consultation to see how we could possibly improve your credit score. Guys, thank you guys so much. See you guys later.